Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the penultimate day of the trading session, and given the fact that we've seen such a quiet, range-bound past couple of sessions, today the trends in the GIFT Nifty is hinting at another subdued start for our own markets. Well, it is also the weekly expiry day for Nifty, so the swings in the market cannot be ruled out as of yet. But yes, coming to the tariffs once again, Brazil, that seems to be the new target by the US, 50% tariffs on the country, and this time, instead of building up of trade deficits narrative that the US has so long stuck with its motive, this time it turned out to be political over support for ex-leader Bolsonaro. And yes, remember yesterday Trump did threaten about 10% tariffs for countries that are part of the BRICS organization, and Brazil, given that B stands for Brazil, Brazil is also a part of the BRICS. So yes, 10% of baseline tariffs that they have threatened for BRICS. Additionally, 50% tariffs that they gave out yesterday for Brazil also. But yes, India, who is also part of the BRICS, still seems like there is no clear path. But I wouldn't say it is completely negative, because typically any trade deals usually take a longer period of time, and possibly US is looking at the granular details of the agreement and from a sectoral perspective as well. So can be a positive sign that the delay could mean. But yes, this is something that we all have been waiting for, given that India was the first one that said that it's in the first line of the trade agreements with the US, but still so far we are seeing no agreement so far as of yet. But yes, shifting away from the tariff tantrums and the trade deals that we have been waiting for, TCS today is set to kick off its Q1 earnings season today, and that is where the focus would be, as the markets have been seeking direction to seek a further up move as well. So yes, lots more lined up. We'll take some stocks in focus. We'll take your stock related queries from our live feed, so keep posting them, and we'll discuss with our market experts as well. Now, before we delve deeper into the show, let's take a quick check of the market headlines this hour. Major stocks on the Wall Street rise, led by tech stocks as Nvidia rises to new record. Asia-Pacific markets are mixed after the US president announced 50% tariffs on US imports from Brazil. The GIFT Nifty, meanwhile, is hinting at a subdued start for our own markets. Oil prices remain steady even as investors weigh on strong US gasoline demand data and attacks on ships in the Red Sea. Gold prices edge higher with a firmer dollar capping gains. In a new round of tariff letters, US President Donald Trump dictates new US tariff rates on Algeria, Philippines, Sri Lanka, among other countries. He also adds that the US would impose 50% tariffs on Brazilian imports. IT major TCS will report Q1 results today, kicking off the June earnings season. The company is expected to report 0.5% rise in its dollar revenue, while net profit may dip on a sequential basis. And sources have told CNBC TV 18 that Indian government plans to complete stake sale in IDBI Bank by this October. Shares of LIC will also be in focus after reports suggested that the government has granted an approval for an OFS. All right, we did see, the range-bound session continues for the markets, and so far this week itself, Nifty is flat at this point of time, flat with a positive bias, but however, a very quiet session we have seen, given that the market has been in search of triggers for a further up move, as I was talking about. But yesterday, Nifty saw a loss of about 46 points, slipped below that 25,500 mark, and if you look at the broader end of the markets, mixed trends emerged from there, because mid-caps continued to see a loss for the fourth consecutive day. However, the small-cap index, that bucked overall trend, and they also outperformed the benchmark indices. Among sectoral indices, what stood out? They stood out to be the FMCG and the consumer durables. They were the top gainers yesterday. However, the IT stocks, that came under pressure ahead of the results which will be due in today's trading session. But yes, it is the Nifty expiry day. Some of the cues that we'll be watching out for is the earnings season, and of course the expiry session that where we could see some volatility as well. But yes, the fund flows data, FIIs, they stood to be the net buyers in the equity markets in the last session. They bought stocks which was worth about 74 crore rupees, and DIIs also were the net buyers. They bought stocks which was worth about 1,000 crore rupees in the cash markets. So despite the subdued session, we have seen a positive flow picture that came in. The other data that we have seen yesterday, that is your Nifty put call ratio dropping to about 0.89 from 1 levels in the previous session, and RBL Bank, that continues to be a part of the FNO ban, and one new stock which has been added, that is your Hindustan Copper. So yes, all in all, we've seen a fairly subdued Qs so far, and right now all eyes are on TCS Q1 results, where it is expected to see a sequential dip in the net profit. But yes, we'll be watching out for the entire IT pack going ahead as well. Now, just a couple of minutes before we take the open, but let's quickly get on board with our technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. Chandan, good morning. How does the market look like?
Good morning, Lavisa. Thanks for having me. Looking at the market, it got stuck in a range. The good part is the declines are being bought, but the concern is that VIX is below 12, and because of that, the momentum is missing in the market. So I believe that broader trading range could continue. The positional basis 25,200 could act as a major support till it holds about the same. We are expecting Nifty to head towards 25,750 to 26,000. But on intraday point of view, I believe 25,400 could act as an immediate support to get a recovery towards 25,600 marks. Looking at the bank Nifty, that is also consolidating in a range, and that is to hold above 57,000 for the day to get some recovery towards 57,650 kind of level, which is the lifetime high. So overall bias is positive, but because of the lower VIX and absence of any trigger, the market momentum is missing. But we will continue to remain buy on decline instance in the scenario.
Okay, buy on decline at this point of time. Broader in the markets, that they were mixed yesterday, Chandan, but small caps fared better. Can we expect an extension of the same going ahead?
Yeah, I believe selective sector and stocks will do well in this market scenario. Like we have noticed, FMCG counter witnessed decent rally in last couple of days. Selective e-commerce related companies are doing well. A few engineering, power, infra stocks are comparatively adding built up of long positions. Selective capital market themes are working well. So I believe one need to focus on the small cap, mid cap pocket in this scenario when indexes got flattish and moving in a range of 100, points.
Okay, all right. How are you viewing the entire Nifty IT index, Chandan, ahead of the Q1 results season? We have TCS, which will be reporting later the numbers today. But anything that you're watching out for?
So Nifty IT got stuck in a range from last almost 13, 14 trading session where declines are being bought but follow-up active is missing. Yes, TCS result will be key trigger, but structure is not that good. But the important part is 3350 is major support for TCS. So I believe it might be the mixed cues, but if we have to select one or two counter, then we can go with the name like Emphasis, where major trend is positive and stock may see some buying interest. So I think Nifty IT could be subdued or might see limited or kept upside at this current juncture.
Okay, all right. What about the Nifty FMCG index? It's seeing a bit of a traction at this point of time because the street has been betting on some good recovery on a sequential basis in terms of volumes. What are you watching out for from the FMCG pack, Chandan?
Yeah, so positive on the Nifty FMCG. In fact, it formed the double bottom kind of pattern on the daily chart. We have seen volume attraction in last couple of days. Counter like HUL, Britannia, Dabur have seen the breakout and build up of long position. So I believe most of the FMCG name could be in focus. In fact, Godrej Consumer Product has given a consolidation breakout and rallied well from 1170 to 1300 marks. Momentum could continue. So Godrej CP and HUL could be the two preferred idea in this pick. And in fact, Asian Paint also witnessed decent recovery in last 20 days, has been making higher top, higher bottom, really well from 2200 to 2500. So I think this entire FMCG pack could play a defensive role along with the momentum and the breakout.
Okay, okay. What about the pharma stocks? Yesterday they were quite resilient despite what the Trump announced about 200% tariffs which will be implemented within a year or so. Anything that you're watching out from the pharma space?
So this sector is likely to be mixed. In fact, few stocks are making lower top, lower bottom. Like Lupin has been witnessing selling pressure. Even Sun Pharma is finding sustained supply pressure at higher levels. Glenmark is the only name which has really rallied well in last 2 or 3 months. So we have to be very specific. Only Glenmark is the counter which is showing strength as of now in the pharma space. While one can look at the counter from the healthcare, whether we talk about the Lawrence Lab or Apollo Hospital, I think healthcare stocks can do well than the pharma counters.
Okay, Okay, healthcare stock can do well. But let's talk about one stock in focus, that is your RailTel. The company did see a securement of an order of about 17 crore rupees from the Chhattisgarh government. Now, this is the third major order win this month for the company as well. But for the past 1 month, the stock is down about 8% or so. What can we expect, Chandan? Can we expect a further underperformance to continue going ahead?
So RailTel has been consolidating in a range from last almost 5 to 6 weeks. In this consolidation, we also witnessed some profit booking as well. In the beginning of the June, it made high at 478, now quoting near 410 marks. So 400 is major support. So I think that can provide a key level. If manages to hold 400, then recovery could be seen towards 430 kind of level.
Okay, 430 kind of levels as well. We have seen some interesting brokerage notes that is coming in on Prestige Estates also. If you look at Morgan Stanley, it's given out an overweight call on the counter, given that its Q1 pre-sales was above the estimates and in line with what the guidance was for the management. And they believe that it appears well positioned to meet its target for FY26 also. And even Obama has given out a buy call on the counter, and they have raised the target per price, saying that it's clocked the best ever quarterly pre-sales, aided by the launch of its 4 projects as well. Prestige Estates and of course the entire realty pack. Anything that you are watching out for, Chandan?
So if I look at the Prestige Estate, I think buying interest may be there at the lower zone. In fact, from last 3 to 4 days, we have seen some recovery from 1580 to almost 1660 kind of level. So with support of 1630, one can look for an upside target to a 1710 kind of level. So yes, Prestige Estate could be in focus.
Okay, Prestige Estates could be in focus. We also had an interesting note that is coming out on Morgan Stanley on power financiers, where they have initiated coverage across a range of counters. For instance, they have initiated overweight on PFC, and they've given out a target price of 508 rupees per share. They've also initiated coverage on REC and given out a target price of about 485 rupees. So they believe that both of these counters can achieve about 12% loan growth in the over FY25 to 28 as well. And at this particular valuations, at this particular rate, they find the valuations quite attractive. Chandan, anything that you have watching out for both PFC and of course REC?
So PFC has bottomed out. In fact, has been consolidating in a range, but multiple supports have seen near 388, 385. Even in last 10 to 15 weeks, multiple time it took support near the same. But again, upside sustained supply is clearly visible near 435. So some positive to range bound bias could be there. As of now, immediate support exists at 410 for upside. Target was 435, 440.
Okay. All right. Let's take another stock in focus, that is your Ambuja Cement, because the company did announce that its subsidiary ACC has successfully commissioned a 1.5 million tons per annum brownfield grinding unit at its Sindri plant in Jharkhand. If you look at from the past 1 month, the stock has been on an upward trajectory. What can be the next target that we can watch out for, Chandan, on the counter?
Yeah, so Ambuja has seen a consolidation breakout above 580 marks. So I believe if it manages to hold 580, it can see a rally to a 620 kind of level. So a major price pattern is at the verge of the breakout. So I believe small follow-up could lead to the next leg of rally in the count.
Okay, all right. Let's take another stock in focus. That was your Emcure Pharma also, because the company did announce that the US FDA has completed a pre-approval inspection at its oncology plant, which is in Ahmedabad, and they've seen no Form 483 issued, which means that there is full compliance from its unit as well. But if you look at from the past 1 month, the stock has entered a bit of a consolidation zone. Chandan, what can we watch out for Emcure Pharma?
Yeah, so I think this counter can see some buying interest. I believe one can look for an upside target towards 5 to 8%. Selective pharma pack could do well.
Okay, okay, all right. Just, a couple of seconds before we address the open. But yes, so we're hoping for a subdued start at this point of time, given it's the weekly expiry today also. And yes, the first rate's coming on your screen. Very flattish start, like I was mentioning. But yes, above that 25,500 odd levels that we couldn't sustain yesterday. But yes, with about 0.1% gains that is coming in for the Nifty at this point of time. Sensex seeing a gain of about 100 points or so. But yeah, we have opened in the positive territory. But it is, it's a wait and watch situation, given that, the swings in the market is quite present, and we constantly flip back and forth and in this range bound market. So yes, all in all, a positive open at this point of time. Broader in the markets, mid caps, if we see, eking out some slim gains, about 0.1% gains at this point of time also. If you look at Nifty Bank Nifty Index, despite yesterday, flipping into the negative territory, it's opened with about 100 points gain, 0.2% uptick coming in for the Bank Nifty Index also. Opened above that 57,300 mark for the Bank Nifty Index as well. So yes, very muted start for the markets. If you look at the global markets, US markets were on a positive territory. Asia Pacific markets, however, were mixed. They digested some of the news of South Korean bank, maintaining its interest rates on a hold. And of course, if you look at from a tariff perspective also, majority of the Asian countries have been given out a tariff deadline of about August 1. So yes, all in all these news have been getting digested for the market slowly and steadily. But yes, from a sectoral perspective, if you look at FMCG index, one of the top gainer on the Nifty 50, extending its gains. However, a very mild start for the FMCG index also. However, what's not doing well, like we were talking about the Nifty Pharma Index, given that 200% tariffs that the US President Donald Trump has threatened, today it's succumbing to a little bit of a pressure despite its resilience yesterday, with about 0.3% downtake that is coming in for the Nifty Pharma Index. On the other hand, if you look at the auto is also open in the negative territory, but very flat in the red at this point of time. Nifty Realty Index, flat in the red. If you look at some of the other indices, for instance, your Nifty Metal Index, one of the top losers and the laggards yesterday, seeing a bit of a up move at this point of time, 0.3% gains coming in. Small caps also doing well, extending its run to the second day right now. And mid caps also has opened slightly in the positive territory. Let's take a look at some of the top gainers and losers at this point of time. Tata Steel seeing a gain of about 0.7%, given that yesterday it was one of the top losers on the Nifty 50 because the street was unimpressed with its first quarter business update. Shriram Finance extending its run with about 0.5% gains coming in for Shriram Finance. Power Grid also doing well with about 0.5% gains. Axis Bank also seeing a gain of about 0.4% or so. So yes, very mild set of gains that is coming in for the top gainers on the Nifty 50 also. But let's take the contrary picture, that is on the flip side, what is not doing well. Dr. Reddy's Lab seeing a cut of about nearly 1%. Wipro, Cipla, Tata Motors seeing a cut of about 0.5%. TCS ahead of its Q1 results subdued in the trade with about 0.4%. Let's take a look at how the entire Nifty pack IT pack is doing. It's quite subdued at this point of time, 0.3% cut that is coming in for the entire Nifty IT pack. And if you look at some of the top drags on the Nifty IT, that also includes the likes of TCS, Infosys, Wipro. All of the large cap IT players are not seem to be doing well. But yes, Tata Steel, once again with about 0.7% gains. Shriram Finance seems to be doing quite well from the past two sessions as well. Anything that you're watching out for Shriram Finance and the entire NBFC pack, Chandan?
Yeah, so looking at the Shriram Finance, I think comparatively some support-based buying is visible. However, major trend is very range-bound. But yes, the way it is holding well above its rising support trend line, some recovery could be seen. So I think with support of 670, one can look for an upside target towards 705 in the counter.
Okay, all right. Let's take a look at Bharti Airtel, because the company did announce yesterday that they have incorporated a newly stepped down wholly owned subsidiary, which is your Airtel Money. Today's stock is down with about very flat 0.3% cut, but the stock has been in an upward trajectory so far this year. Chandan, anything that you're watching out for Airtel?
Yeah, Bharti Airtel major trend is positive, but it has been consolidating in a range from last almost 10 days. We have seen sustained supply near 2050 marks, but at the same time, declines are being bought with support of 2000. So I believe 2000 to 2050 could be range. Those who are looking for next leg of rally, look for a range breakout about 2050. While those who are looking for bargain buying, let it find some stability near 1970, 1980 marks.
Okay, all right. Let's take some of the viewer queries that has been dropping on our live feed. The first query coming in from Debu K. He's asking the views on ABB. ABB, if we see from the month of April onwards, the stock did pick up some pace, but right now it's entered once again a consolidation zone. Any target levels that we need to watch out for, Chandan?
Yeah, so looking at ABB, I think the stock has been consolidating in a range. In fact, it witnessed some corrective move in last 8 to 9 days. It corrected from 1675 to 5820, but from last 2-3 days, sustained buying interest or support-based buying is there. So momentum is missing, but it formed the base near 5800, which one can look at in mind to find some support-based buying. So, frankly speaking, momentum is missing. those who are holding or interested to take, keep a small support near 58,000, 5,800.
Okay, 5,800 that support for ABB India. Let's take another viewer query. Paddy is asking the view on Adani Power, and he's asking whether he can invest at this particular price for the period of 1 year or so. From June lows, the stock is doing well. Chandan, it's seen a breakout and the stock is up about 14% or so. What would you suggest?
So yes, one can look for investment. In fact, the consolidation breakout is visible on the weekly chart after 34 long week. We have noticed multiple supply near 600 marks, but now it is holding near to the same level. So technically, a base formation is created, and I believe if someone is looking for positional point of view, with support of 550, it can head to a 700 to 720 levels.
700 to 720 levels for Adani Power. Let's take another viewer query. Manish is asking the view on Nuvama. He's asking whether or not is there any risk to projected growth given the loss from the business from Jane Street, or is there any other legal risk that may create uncertainty? Of course, on the day of the news of the SEBI action on Jane Street, the stock did witness a crash of about 11 to 12%. But the stock since then has recovered about 22%, and today also the stock seems to be doing a little better. Chandan, anything that we need to watch out for the counter going ahead?
So I don't see a major change in price action, but yes, it seems upside is being kept as of now, given the change in the scenario. We have seen a corrective move from 8,500 to 7,135 in last 18 days. But one need to keep in mind that major trend of the counter is positive. So I believe those who are holding can keep the support near 7,100. And I believe with the support of 7,100, it can again attempt to 7,800 to 8,000 levels.
78 to 8,000 levels. Let's take another viewer query then. On that note, Savita is asking the view on Sterling and Wilson Renewable Energy for the long-term horizon. Sterling and Wilson, past 1 month, stock has recently seen a breakout, and so far this month it has been like up about nearly 9% or so. Chandan, can we expect an extension of the same, the rally? Do you believe it's sustainable?
Yeah. So expecting positive momentum. In fact, very few counters are witnessing such kind of momentum. So yes, one can hold. As of now, 322 is support. Counter can head towards 350, 355 levels.
350 to 355 levels. All right. That is something that we need to watch out for as well. Let's take another viewer query on that note. Geetu Sandesh is asking whether it is good to hold Sharda Motors from a long-term horizon. If you look at Sharda Motors, the stock today, however, it's seemed to be doing okayish. But if you look at from a long 3 months horizon, the stock has seemed to not doing well with about 0.2% cut that is coming in for Sharda Motors. If you look at it from the 3 months perspective, however, the stock has been on an upward trajectory, 46% gains that is coming in. Chandan, what's next for the counter?
So we are not tracking this counter very closely, so I can't comment. But my suggestion is try to keep the quantity lesser in the such kind of mid cap, small cap.
Okay, all right. Let's take another viewer query on that note. Satvika is asking the view on Whirlpool India, and she's asking what is the near-term horizon for the counter. The stock is doing fairly okayish, 0.2% gains coming in at this point of time, but from a year-to-date chart, the stock is down about 25% or so. From a near-term perspective, how does the counter look like, Chandan?
So near-term positive to range-bound bias could be there. Buy on decline, maybe the stance. One can use the support near 1315 or a bounce towards 1400.
Okay, all right. Let's take another viewer query on that note. That is your Satvika is also asking the view on HFCL. She's asking what should she do at this point of time for the counter. If you look at the past 1 month, the stock has been exhibiting a negative trend with about 9% downtick. Can we expect the underperformance to continue?
Yes, so I believe mixed set of cues will be there. Sustained supply is clearly visible at higher levels. So look for a range-bound bias in the counter.
Okay, range-bound bias in the counter. All right, let's take another viewer query. Shivakumar is asking for Trent, whether or not is it a good buy after the correction from a longer period. What would you suggest? Trent, it's seen a muted Q1 business update also, and since then, after the Q1 business update, the stock did see a cut of about 12% or so. Today, the stock is still flat in the green at this point of time, but Chandan, from a near-term perspective, how does the stock look like?
So for near-term point of view, I believe some sort of consolidation is required, but those who are looking for investment or slightly bigger time frame can definitely look for this. Those who are looking for immediate, look for some more decline with support of 5,000 to accumulate the counter.
Okay, all right. Let's take another viewer query then. Ratna Kumar is asking, he's been holding TCS shares for a long-term horizon and not much of the returns he's seen so far, but he's asking whether he should hold or sell the counter. Of course, TCS due to report results today, but if you look at from a YTD perspective, the stock has been down 17% or so. Today also the company is expected to report a subdued performance for the first quarter. But Chandan, anything that we can watch out for from here on for TCS?
So like, so in this year, the stock is down by 17%, underperformed. But one need to keep in mind this is the counter which really created wealth for the traders or investors. If I look at the summary of last 15 years, it really developed from 100 to 4,500 something. Multiple dividends, bonus, splits have seen in the counter. So if someone is asking for long term, then obviously one needs to hold. But if someone is looking for short term, I don't see major upside in the counter.
Okay, all right. Not major upside for the near-term perspective for TCS. Uh, let's take another viewer query on that note. Loan is asking the view on Finolex Industries from a mid to long-term horizon. He's been holding it at 208 rupees per share. The stock is nearly to what he's been holding at this point of time. After the June rally also, the stock has fizzled out majority of the gains. Chandan, what is the near-term horizon indicate for Finolex Industries?
Yeah, so for Finolex, I believe one need to look at the support near 198 and it can head towards 218 to 22.
Okay, all right. Let's take another viewer query at this point of time. First is asking the view on Godrej Properties and the entire realty pack. Godrej Properties, yesterday we did see the stock witnesses some pressure after a brokerage note indicated that they see a moderating growth outlook from here on. But from a near-term perspective, how does the stock look like given that the stock has been on a downward trend in the past 1 month, Chandan?
So Godrej Property has been making lower top, lower bottom on the weekly chart. So structure is slightly negative for near term, but yes, on downside 2180 could act as a key support. So I believe buy on decline with key support can be utilized.
Buy on decline support can be utilized for the counter, that is your Godrej Properties. Let's take another viewer query then. Shailesh is asking the views on Lakshya Power Tech. Lakshya Power Tech, if you look at the stock, will just appear in a bit how the counter is doing today. But Chandan, any thoughts on the counter, Lakshya Power Tech?
No, I'm not tracking it closely, so it would be tough for me to comment.
Okay, tough for you to comment. But let's take a quick check of the markets, how it has been doing right now. If you look at both the indices did open in the positive territory, but it has fizzled out gains at this point of time. And of course, Bank Nifty index has been very flattish in the trade at this point of time. If you look at the oil and gas index, that seems to be doing well. If you look at the PSU banks, they also seem to be doing well. On the other hand, if you look at the FMCG index, that has fizzled out rally at this point of time. So yes, all in all, it's a very subdued session once again. But yes, Nifty Auto Index with about 0.2% cut that is coming in. What is your view on the entire Nifty Auto pack, Chandan? Given that, we've seen a little bit of a swings on that front, and of course, we did see the auto sales figures, which was quite subdued.
So the mix set of cues, momentum is not there, but support-based buying is there in the Nifty Auto. I can select Ashok Leyland here with the view that technically it has given a breakout from its pole and flag pattern on the daily chart. So with support of 245, Ashok Leyland can head towards 265 kind of level. While other name, whether we talk about Maruti, M&M, Asher Motor, are likely to remain range bound as of now.
Okay, likely to remain range bound. Let's take one particular brokerage note that came out today, that was on HSBC on Varun Beverages, because they have cut the target price on the counter, and today we can see that Varun Beverages is down about nearly 1% or so. Now what HSBC has been indicating is that the weak Q2 volumes has already been priced in the stock, and the key question remains is whether the slowdown is seasonal or structural, and whether the changing competitive dynamics are healthy for a growing soft drink market, and whether or not the company can sustain growth in line with the industry as well. Varun Beverages not doing well with about 1% cut coming in for the counter. Past 1 month has been also quite difficult for the counter with about 3% cut, and so far this year also the stock has been an underperformer. Any thoughts on the counter, Varun Beverages, Chandan, because the stock has been exhibiting a negative downtrend?
So VBL has been moving in a range. In fact, it has been underperforming from last couple of months. On the weekly chart, it has been making lower top, lower bottom. On daily chart, 470 is acting as a hurdle. So if it moves above 470, I think recovery could be seen towards 495.
Okay, 495. Let's take another brokerage note then. That is your HSBC on Axis Bank, because they have given out a buy call on the counter and they've given a target price of about 1430 rupees. Now, what they believe is that the AR analysis highlights improvement in granular liabilities, control on costs, and they believe that there is an sharp growth in bank assurance fees. The stock seems to be doing well with about 0.7% gains that is coming in for the counter, and they believe that small improvements for the stock can be as a re-rating catalyst going ahead. Axis Bank, anything on the counter that you're watching out for, Chandan?
So momentum is clearly missing. In fact, in the last week, we have seen a corrective move, but now support-based buying is visible near 1150. So 1150 to 1200 could be the probable trading range as of now.
Okay, all right, 1100 to 1250 range for Axis Bank. All right, just one last question before we let you go, Chandan. What are your buying picks at this particular hour? Anything that you want to list out?
So I'll focus on delivery. Stock has seen a consolidation breakout on the daily chart and the weekly chart. It has been making higher tops, higher bottom. We have seen a fresh breakout. So with support of 415, one can look for an upside target towards 440 in the delivery. Apart from that, one can look at the counter like Nika. Positive price setup is clearly visible in the counter. It has seen a surge in the trading volume in last two trading sessions. So with support of 208, one can look for an upside target towards 228. So Nika and delivery could be two preferred ideas for the day.
Okay, Nika and delivery. Both of these stocks we'll be watching out for in today's trading session too. But with that, we have to let you go, Chandan, and thank you so much for your time and joining us. All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at from the benchmark indices, once again a choppy session continues and Nifty has slipped below that 25,450 mark as well. So earlier we started the day with 25,500 above, but we have slipped below that 25,450 mark at this point of time. If you look at some of the sectors that has been contributing to the Nifty's down move, that includes the likes of Nifty Auto, Nifty IT, and Nifty Pharma Index. All of these three sectors have been trading with a set of losses. However, what is doing well, that includes the likes of PSU banks, private banks, both of them holding up well. Nifty Realty Index with a gain of about 0.4% gains. If you look at the broader end of the markets, that seems to be outperforming the benchmark indices, both the small caps and mid caps in the positive terrain at this point of time. But with that, let's move on to our next guest of the show. We have Manish Sonthalia, Director and CIO of Emkay Investment Managers, joining us. Manish, good morning.
Good
Markets have
morning.
been range bound, for the past couple of sessions, and all eyes are on the earnings season and the trade deals. But what is the kind of growth that you are expecting from this first quarter results? And with respect to that, how are you finding the valuations?
Yeah, so we are in the middle of the earnings season, and as like any earnings season, things are likely to be volatile during this period. But I'm of the very firm opinion that given this volatility, uh, it's a buy on dips. It's an unequivocal buy on dips, and I believe that investors who would buy in this dip would really stand good to reap the benefits that's likely to play out in the second, third, and the fourth quarter. As far as the earnings season is concerned, I think this earnings season, the growth is likely to be Nifty 50 earnings growth is likely to be in the range of around 3 to 8%, give or take plus minus 1 percentage points. And there will be sectors which will do well. There will be sectors which will not do well. So this is how the entire construct of the markets is placed. I think markets are likely to overshoot on the upside, and this is the period when there's going to be volatility. But make use of this volatility to buy into your favorite stocks.
Okay, okay. Last quarter we saw a major earnings surprise that came in from the mid-cap space. What are you expecting from this season, mid-caps, small caps versus the large caps at this point of time?
So again, I think this earnings season, the mid caps are going to broadly outperform 20% plus sort of earnings growth YOY. And we got to figure out how the small cap space is likely to be playing out. But as regards the earnings for the last quarter, even the small cap universe, delivered earnings growth of around 15%. This time around, it's going to be likely slightly lower than that, but still there's going to be decent growth. I think this entire space is more about picking the individual names rather than the index as a whole. But overall, I think the earnings are likely to be better for the mid and small cap when you compare it with Nifty 50 earnings.
Okay, okay. We have TCS results, which is due today, Manish, and everyone has been expecting that it's going to be a negative trend only this time. But anything that you're expecting from the IT pack, even this season, or maybe going forward in the second half of this fiscal year?
Commentaries around the IT space is going to be important, particularly when it comes to translation of the book into revenues. I think not too much of a great expectation from the IT pack this quarter, minus 1.5 to plus 2.5 for the entire range of stocks in this space. I think the thing to watch out for would be margin figures because there's going to be cross currency tailwinds. And obviously, the commentary around how the order bookings are playing out, particularly when it comes to not the efficiency improvement side of business, but for discretionary spends, transformational big deals, and how those the book is translating into revenues. As far as the valuations are concerned, they are probably pricing in the worst sort of situation when you look at or extrapolate the growth around crisis period in the past for Indian IT companies. I think we are overshooting that on the downside. And that is why, again, for the IT space, I would believe that it's a good time to basically look at individual companies and buy. That goes even for TCS.
Okay, okay. The entire IT pack has been having subdued growth in the past couple of quarters as well. But that was also on the fears of the rising, US recession. There could be some slowdown fears. But right now, the Trump's tax bill has been passed. And the recession bits has also, been reduced. Do you believe that that could actually aid the earnings growth going forward? Maybe not this fiscal year, but at least in FY27?
Yeah, FY27, there's certainly more clarity. FY26 is, 70% recession chances in the US has got whittled down to 35-40%. But still, there are chances of a recession. If that chance is going to come down even further, that definitely bodes well for Indian IT names. And as far as the stock performances in the US is concerned, of course, these names are not exactly comparable with that of Indian IT names. Nvidia yesterday hit a $4 trillion market cap number. So from that point of view, again, I would believe that second half should be better than the first half in terms of Indian IT vendors. And obviously, I am of the firm opinion that FY27 is going to be far better than FY26.
Okay, okay. Manish, let's talk about the banking sector also because the early bank updates did suggest a slowdown in the credit growth and the margins could be in check due to the repricing of loans as a causality of the rate cuts. But how would you suggest to investors to play the entire PSU versus the private lender pack at this point of time?
I think valuations favor the public sector banks, and even the earnings for this quarter is going to be much better for the public sector banks vis-a-vis the private sector banks. There's going to be, first of all, the credit growth in the system because of very low inflation is likely to be high single digits. It's not going to be double digits per se. Secondly, there is going to be, some sort of margin headwinds because of repricing of the loans, which are to be reset based on MCLR or repo linked. And, that is basically going to be more pronounced for the private sector banks. And, even the mark-to-market gains on the bond portfolios, the investment book is going to be more pronounced for the public sector banks as opposed to the private sector banks. All in all, I think considering valuations as well as growth, there's high degree of margin of safety in the public sector banks. at these prices, and they would be a preferred lot to be picked up in the current market situation. I would not to say that we are not in favor of private sector banks, the large private sector bank, but that's more for the medium term, not exactly this one.
Okay, okay. Manish, everyone is betting on FMCG. Are you bullish on this particular space too, given that everyone is betting on some sequential recovery in volumes, some pickup in demand from the urban pockets? What are your perspective?
So I think on the consumption side, more favorable towards discretionary consumption as opposed to FMCG per se. But having said that, I think rural economy is turning the corner. Valuations are conducive, not exactly very cheap for the FMCG names, but still, if the earnings revival is there, it's going to be favorable. Out here, I would like to believe that urban FMCG facing companies are likely to face bigger competition from D2C brands vis-a-vis rural FMCG plays, where the competition is going to be less. And so, within the FMCG space, I think rural-facing FMCG companies are more favored in the current context, given the growth and the valuation.
Okay, okay. What about the entire QSR space? Because last quarter we saw an average revenue dropping by about 9% or so on an average basis. Can we expect things to improve from this quarter onwards?
More like improvement likely to come from the second half of this year, but obviously, on a sequential basis, things are likely to improve because of slightly more money in the hands of the middle class and this income tax savings and obviously sentiments on the consumption side being better, given that inflation is benign. So I would believe that the space has really seen a heightened degree of slow down. Same-store sales growth have not really been up to the mark, but that's changing, and I think it's going to be more pronounced towards the second half in terms of numbers. But as they say that markets extrapolate the future, and obviously the stock prices would likely start to see the uptick, even from this quarter.
Okay, okay. What about the food delivery businesses? Swiggy, Eternal, both of them, they had faced some challenges in the fourth quarter also. There were rising expenses, competition got heated up, and there were some profitability challenges that also emerged in that quarter as well. But going ahead, how do you think things to pan out for at least this quarter or even for the rest of the fiscal year?
I think it all boils down to unit economics of these quick commerce players. And I think all the three players and more coming in terms of competition. I think the right to win stands with the largest quick commerce guy, and he's got the unit economics right. He's expanding quite well in terms of opening of dark stores. His take rates are much better than that of competition. Competition is currently more believing in giving discounts and freebies, aggressively increasing the top line per se, but not so much on the profitability side. And I think markets ultimately would want to see the path to profitability more clearly. And I think that today is evident only from the largest guy, not the other two guys.
And how do you view the space, given that we are seeing some new entrants in the space as well? We are seeing Amazon's foray, we are seeing Rapido's foray. Do you expect, it's going to take some time, but slowly and steadily, but of course, any impact that you're looking at or from a larger perspective into the market share?
Competition is definitely looking like heating up because these newer players have deep pockets. They can disrupt pricing. But it's not a very easy business to do. And even if you have very deep pockets, the learning curve in this business is quite steep and it's quite long. So from that point of view, I think it's going to take some time. Some of the very large players have yet not been very successful. And I think the unit economics part, that is to optimize the catchment area vis-a-vis the riders. How do you optimize the company's profitability on account of effectively utilizing the riders to the optimum is going to determine how much money you're going to make. And that's basically a tough call. And even the large players are likely to face the heat. Having said that, they have deep pockets. They will disrupt the market, but the market is extremely big. Currently, quick commerce is only evident, so to speak, in the metros. Over a period of time, it will trickle down to your tier two, three towns and cities also. So it's a much bigger place. But I think, as they say in retailing, it's all about getting your unit economics right, and then it's about expansion. So I think the unit economics part is likely to take the time, but expansion, India is a large country. There's a lot of headroom for growth.
Okay. Manish, now that we spoke a slew of sectors, anything that you're finding where there is growth elusive at this point of time? Anything that you're underweight on?
Capital goods, I think government spending is likely to get cut because we are living in an era where FRBM has got shrunk, which means that we are talking about 4.3% fiscal deficit, 6.5% real GDP growth. Revenue growth is not going to be more than 10.5, 11%. You have defense expenditures that's likely to go up, and obviously there has to be a cut from somewhere. Either the income numerator has to go up or the denominator has to come down for the FRBM to shrink. So from that point of view, I think expenditure side needs to be rebalanced, and private capex is still elusive. There's a lot of hope, but now even the government capex will see a shift away from government spending to defense. Government has a large balance sheet, 50 lakh crores sort of a balance sheet, but we got to see things at the margin. That is to say, compare this year versus last year. So from that point of view, I think valuations are quite elevated across the capital goods names. That is not to say that 2030 picture doesn't look all that, bad. It's great in terms of expectations, but near-term valuations are very, very full vis-a-vis the growth.
Okay, okay. All right, just one last question before we let you go, Manish. Everyone is chasing for the Nifty to clinch that all-time high levels. But given the kind of earnings growth that we are anticipating from a street level perspective, do you believe that Nifty's all-time high, which is at 26,277 levels, would be sustainable?
Markets never stay in equilibrium, and they either overshoot or undershoot. This time around, due to very benign liquidity situation, overdose of liquidity, as well as lower cost of lower cost of capital, I think markets are likely to overshoot on the upside. Yes, you are right. Earnings growth is not going to be more than 10, 12% for this year, and more like 12, 13% for next year. 26,000 or thereabout appears to be very full valuations. But because lower cost of capital and high dose of liquidity, you'll likely see markets overshooting on the upside. It's only a matter of time. 26,277 is likely to be taken out. It's a buy on dip, unequivocal view, and I think this quarter earnings volatility should be utilized to the maximum to one's advantage on the stocks that one wanted always to buy.
Manish, just any time frame that you have in mind for the Nifty to overshoot the all-time high levels?
I think in any case, the second half onwards, you have a very low base on the earnings of last year. So obviously, your fundamentals will look much better in the second half, and that is basically of around the festive season. We're already in the second quarter. Monsoons, predictions, etc. You'll come to know by August, September. So I think within a month or this quarter, July, August, September quarter, I would be surprised if we don't take the Nifty all-time highs this quarter.
Okay, okay, all right. All right, with that, we have to let you go, Manish. Thank you so much for your time, and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets at this point of time. The Sensex and Nifty both continue to be in the negative terrain, and Nifty below their 24,500 mark at this point of time. It's above that 24,450, but still below that 24,500 mark at this point of time. And as usual, sectors that have been contributing to the losses, like I mentioned, Nifty Auto Index still to be in the red. Nifty IT index, however, it's trimmed some of its losses compared to what we were seeing, but still down by about nearly 0.3% or so. Nifty Realty Index seems to be doing quite well with about 0.5% gains that is coming in. And of course, Bank Nifty Index also with about, a little bit of mild gains that we can see from the Bank Nifty Index also. India Wix, that continues to be at depressed levels. So that would indicate, that the market has been in a wait-and-watch situation to see for a further upside and to actually see for a next trigger for the further up move. But so far as of now, we are seeing a subdued session, a choppy session, and given the expiry day that it has been, some volatile swings could be imminent in the market, and we'll watch out for the second half if there is any particular recovery in the markets as well. But yes, for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.